Bitcoin just exploded back above $68,000, and there are suddenly multiple bullish catalysts hitting at the same time. Bitcoin jumped roughly 6% during Wednesday's rally, briefly pushing even higher as traders rushed back into the market. And one of the biggest triggers came from an unexpected place: the U.S. Treasury. Treasury Secretary Scott Bessent announced that the government will at least double the size of certain bond buyback operations for longer-dated Treasury securities. The maximum size is increasing from around $2 billion per operation to at least $4 billion. Now, this is not the government printing money specifically to pump Bitcoin, but markets interpreted the move as potentially supportive for liquidity in the massive U.S. Treasury market. And when liquidity expectations improve, risk assets like crypto can benefit. Bitcoin reacted almost immediately. As BTC surged through $68,000, bearish traders got absolutely crushed. Around $1.4 billion in short positions were liquidated within roughly 4 hours. Basically, traders betting that crypto would continue falling suddenly had to close those positions as prices moved violently against them. And Bitcoin was not the only asset moving. Ethereum jumped more than 8% during the rally. Solana gained around 7%. Crypto stocks like Coinbase also surged. So this was a broad risk-on move across the market. But there is another bullish signal Bitcoin investors should be watching. ETF money is coming back. U.S. spot Bitcoin ETFs recorded roughly $189 million in net inflows in the latest session. BlackRock's Bitcoin ETF alone accounted for more than $143 million of that. That comes after another strong inflow day immediately before it, meaning almost $500 million flowed into Bitcoin ETFs across 2 sessions. And August ETF inflows are now approaching $1 billion. That is especially important because Bitcoin ETFs had just experienced several consecutive days of outflows. So institutional demand appears to be turning positive again at exactly the same time Bitcoin is breaking higher. If those ETF inflows continue, this rally becomes much more interesting. And while Bitcoin itself is moving again, one early-stage project trying to build on the Bitcoin ecosystem that I've been watching is Bitcoin Hyper. Bitcoin Hyper is developing a Bitcoin Layer 2 powered by Solana virtual machine technology. The goal is to give Bitcoin users faster and cheaper transactions while opening the ecosystem up to things like decentralized finance, staking, and applications. Bitcoin Hyper is still in pre-sale, and its price continues moving higher through scheduled pre-sale stages. That does not guarantee the token will rise after launch, but if you have already researched the project and like the idea, getting involved during an earlier stage means entering before those later scheduled price increases. And you do not need to start with a massive amount of money. This is still an extremely speculative project, so keeping your exposure reasonable is important. If you want to make the process easier, Best Wallet is another tool worth checking out. Best Wallet is a non-custodial multi-chain wallet where you can buy, store, swap, and manage crypto from one app. It also makes accessing newer projects like Bitcoin Hyper much easier instead of constantly jumping between different exchanges and wallets. Best Wallet supports major networks including Bitcoin, Ethereum, and Solana, and uses security features including MPC technology, encrypted backups, biometrics, and optional 2-factor authentication. Links to both Bitcoin Hyper and Best Wallet are in the description. Just remember that Bitcoin Hyper is a pre-sale and carries substantially more risk than Bitcoin itself. Coming back to Bitcoin though, this rally suddenly has several things working in its favor. Improving liquidity expectations, ETF money returning, billions of dollars in shorts getting squeezed, and renewed strength across the broader crypto market. The next question is whether Bitcoin can hold this breakout once the short squeeze cools down. Because if institutional money continues coming back while liquidity conditions improve, $70,000 may not be the only level traders start watching. As always, do your own research and never invest more than you can afford to lose.